2024 was a year of exceptional market performance, with a decline in inflation, robust GDP growth, strong corporate profits, and easing monetary policy. To tell us what we can expect for the markets in 2025, we're joined by the Global Head of Investment Strategy at jpmorgan Private Bank, Grace Peters. Grace, welcome.
Thanks so much. It's so great to be on the show.
Grace, this year's Private Bank Global Investment Outlook focuses on the theme of building on strengths. Can you tell us a little bit more about this and how it will influence market dynamics this upcoming year?
As we enter 2025, we have to remember that we've had 2 years of very strong performance from risk assets. If we look just to 2024, you've seen 56 all-time highs in the S&P. You've also seen assets like gold up some 30%, credit markets performing well also. So building on strength is really about taking that forwards and saying, yes, we're pretty confident in the outlook for risk assets. We think there will be a third year of good performance, but we must still invest in a risk-aware way. A couple of the things that I'd highlight when we think to those risks would firstly be complacency. Because we've had such strong performance for a period of time, we mustn't get complacent. We must constantly be adjusting for concentration risks and making sure that we're properly diversified. And the second thing is when we think even beyond 2025 into the structural environment that we're in, we do think we're in a different world. And so we think that the portfolio you need for the next decade is actually different from the one that you needed in the last decade.
Grace, what are some of the key themes and trends investors should consider moving into 2025?
So we are constructive on the outlook for growth. When we think predominantly in the US, the growth that we have as we exited 2024 was around 2.5% real GDP growth. And we think that those levels can continue over the next 12 months or so, which sets a really healthy backdrop. So my first theme would be US exceptionalism. US exceptionalism when it comes to GDP, but also how that will translate to US equity market performance that we do think is going to be superior and drive around 7 to 8% returns in the S&P over the course of the next 12 months. But my other two themes would be global themes. Firstly, artificial intelligence and specifically the build out through the value chain as AI gets increasingly more adopted by companies throughout the developed world. And secondly, the theme of security. When we think about energy security, cyber security to support the AI expansion, we think that those are two really compelling global themes to supplement strong US growth.
With significant elections having taken place globally, how can investors effectively navigate the potential impacts of policy shifts and the evolving economic landscape?
The first thing is that we really encourage clients to focus on the fundamentals. One of our guiding principles is that over time, it's earnings growth drive share prices or risk assets at large. And so it's so easy to get buffered by the headlines, but to us focusing on the fundamentals is crucially important. And what do I mean by the fundamentals? GDP growth, balance sheet strength, the ability for companies to invest or acquire future growth. And so really focusing on those fundamentals would be my first tip. The second thing is then to properly analyze the risk in the context of the portfolio and make sure that different assets you're putting together in the portfolio can help mitigate some of those risks. So risks that we might look to at the moment could be the risk of a growth slowdown. If we were to see a recession on the horizon, fixed income could do extremely well. On the flip side, inflation and the re-emergence of inflation is something that investors should also have front of mind. And therefore, infrastructure assets or gold, we think, can also be a really good real asset to include as a complementary position in the portfolio.
Really interesting, Grace. So how do you see innovation, including developments in artificial intelligence, powering the future of markets?
Well, innovation is critical, and generally the market rewards innovation when you can get a return on the investment capital that you need to put up front. So in the case of artificial intelligence, we think that you're just at the cusp of the inflection point, the J curve, where more and more companies are going to be actively using AI in their day-to-day lives. So for us, that means, yes, the Magnificent Seven, the large cap technology companies, they've done well, rightly so, because their earnings growth has been more superior. But on a forward-looking basis, we're looking out through the AI value chain. And what's super exciting to us is power infrastructure. When you think about the power needs that will facilitate and come with a data center build out, you're going to need a multiple of power over the next 5 to 10 years. And the infrastructure to produce, transmit, store and regulate that power, as well as the water needs that come with that as well, are very important. So we like industrials, we like utility companies, and also infrastructure assets in private markets to capitalize on that.
And finally, Grace, when engaging with the clients, what is one key message you consistently emphasize in your discussions?
The most important thing for us is that the client gets invested and stays invested according to a personalized plan. It may be an investment policy statement. For many of our clients, it's a plan specifically around the intent of their wealth. But getting invested, staying invested means that you can avoid the pitfalls when volatility strikes, you're expecting it, and we think that that is the best way to compound wealth over time.
Grace Peters, thank you so much for your insight.
Thank you for having me on the show.